Peace of mind and financial security for your family, here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Seems everything costs more these days. Gas, groceries, and when's the last time you checked your wireless bill? Yikes. When it comes to big wireless, if you're staying, you may be overpaying. Here's how to get the same fast, reliable nationwide coverage without the big wireless bill. Switch to Consumer Cellular. Plans start at just $20 a month, and that's not a short-term promo. Our U.S.-based experts will get you switched and saving in about 20 minutes. Call 1-888-FREEDOM or visit consumercellular.com and start saving today. Plans include $5 credit for auto pay and e-billing.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Understanding Medicare, Essential Questions Answered. Mike, first one that most people have, how do you actually become eligible for Medicare?
Vast majority of us, you turn 65, and there's a special window that becomes open to you when you are turning 65 for you to sign up for Medicare. And important here because you really do have to sign up. Even if you might not be using the coverage in the way you planned, there's a 7-month window, 3 months before the month you were born, 3 months after, and the month of your birth that you have to sign up for Medicare, and you need to get in there and do so. Otherwise, if you're disabled, you are potentially eligible for Medicare, but for most of us, it's that 65th birthday.
What are the different parts of Medicare, actually?
Yeah, so the Part A basic piece is just your hospital insurance coverage. Most people don't pay for this. This is part of the benefits, and it'll cover inpatient hospital stays, skilled nursing facility care, etc. Hospice care, for example, is in there. Then you get into Parts B, C, and D, and that's where you get into more complex stuff. But your Part B is your medical insurance. Part C is your Medicare Advantage plans, and then Part D is an important one when you're retired as well, your prescription drug coverage, and that's where getting a professional involved there to help you consult on what you might need given your specific health needs is important.
The guide is titled Understanding Medicare, Essential Questions Answered, and it discusses these topics as well as a host of other ones. How do you request it? Call 800-393-4001. That phone number again to request the guide is 800-393-4001 for the guide Understanding Medicare, Essential Questions Answered.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan's new guide is called Back to the Basics. It contains a simple blueprint that will help you create a retirement plan that protects your assets from probate and the nursing home, while also giving you guidance about how to create your will and set up your beneficiaries so that your family's financial security is intact as you get older. If you haven't done your planning yet, or need a second look at your existing plan, call Cushing & Dolan today at 866-848-5699 and ask for their new guide called Back to the Basics. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Welcome to this Wednesday edition of the Financial Exchange. Paul Lane, Marc Fandetti, and Tucker Silva here with you. We are coming off the heels of an inflation report that was released this morning, and the markets are reacting pretty negatively across the board, with the S&P 500 off close to a full percent, the NASDAQ also off 0.75%, and the Dow Jones is off over 400 points at the moment. We're about a half hour or so into trading. We're also seeing the U.S. 10-year Treasury up about 10 basis points today at 4.65%. And we have to start off with the inflationary report. We've done a lot of talk on this program about tariffs and economic policies of the new administration. Very much so, inflation has been put on the back burner, at least in terms of, it seems like, the financial community consensus in terms of what we're covering from news pieces and headline articles out there. But today it is all about inflation. We did see a very startling inflation report, Mark, at least in my view, that came out this morning at 8:30. Just to jump into some of the numbers here, a very hot report for the month of January, where we saw CPI, the Consumer Price Index data, increased by 0.5% month over month. We now have inflation running at about 3% year over year. Just to give listeners a sense, we were in the range of headline inflation year over year between 2.5% to 2.7% between August and November. So it did really seem like we were seeing a pretty nice cooling, getting closer back to the Fed's overall target of 2% during those summer and early fall months. But this most recent report, like I said, increasing to 3% 12 months trailing. And some of the biggest factors on this report, Mark, that we'll get into here is food is certainly one that you have to address. We've covered a lot on this show, and I'm sure listeners have seen it. Going to the grocery store, egg prices have been up 15% month over month. That's captured in this data. That was the largest increase since 2015. Egg prices now stand up 53% over the last year. Food in general, excluding just the specific egg data, was up about 0.4% month over month. And then we also saw energy prices increasing 1% month over month. And so for those of you who listen to the program and would argue, well, gee, Paul, you and Mark always talk about stripping out the impacts of food and energy. Even if you look at that data, which the Fed focuses on the most, because food and energy can be pretty noisy on a month-to-month basis, if you strip those out and look at what's called core CPI data, which doesn't have the impacts of energy and food costs, that data was hot as well in terms of what we're seeing on the inflationary front, where we saw a 0.4% increase month over month on that core CPI data, or 3.3% year over year. So however you slice this, Mark, it's a very hot inflationary report. It's really not a very strong report for those people who were under the impression that, inflation was trending down.
The question is, should it surprise us? Should it surprise us that inflation, which is the average increase in the prices for goods and services that we buy, that it remains, I'll just say elevated, higher, that is, than the Fed's 2% goal, and seemingly over the past few months increasing? The trend is now upward. Should that surprise us? That depends on your view of inflation, of what drives it. Researchers can calculate the economy's productive potential. It's an estimate, but it's the best we've got. And relative to the economy's productive potential, we're growing too fast, or faster. You may say, well, that's not a bad thing, right? We're exceeding our potential. No, in the short term it isn't, but it puts upward pressure on prices. Researchers also calculate a natural or normal, less formal, a rate of unemployment. The current rate of unemployment is below what most researchers think is sustainable in the long term. So considering those two factors, and this is a very traditional economic way of looking at short-term inflation, when you consider the economy's running a little bit hot, it shouldn't surprise anybody that prices remain elevated. Now, whose fault is it that the economy's running a little bit hot? Well, it's certainly not the new administration's fault. They've got to deal with this number. But they inherited slightly accelerating inflation. But so did the last administration.
Yep.
The last administration let it get away. Biden inherited an increasing rate of inflation from Trump. Not a surprise. Trump pumped a lot of stimulus into the economy.
And perhaps stoked it further, though, with the...
I was just going to say, they compounded it. They were told not to by many prominent economists. Others were on the other side of this. They made it worse. The administration this time might be making the same mistake. They are inheriting an economy that's running hot. They're going to make inflation worse by decreasing the labor supply. That's what happens when you deport people or force them underground. I'm not saying people who are breaking the law shouldn't be deported. I'm saying simply it's a consequence of enforcing the law. Tariffs, not just their actual effect, which we've yet to experience for the most part, but the expectation of tariffs. It pulls consumption forward. People are front-running them. There's stories everywhere about people running out buying durable goods, expensive stuff that might be subject to tariffs. Now, I don't think there's any evidence of that necessarily here, but there's certainly evidence in inflation expectations, which also don't show up here, but are an important part of the inflation process. So, Paul, I'll wrap up my little commentary here by simply pointing out that it is not a surprise that inflation remains stubborn, seems unwilling to return to the very low and stable rates we were used to in the 2010s. The economy's running hot.
Right.
The danger is that policymakers compound it with continued, I didn't even mention, possibility of additional fiscal stimulus. All these tax cuts are going to put more money into the economy. That's going to run up the deficit a little more in the short term, push the economy further above its speed limit. That plus tariffs, plus the complicated dynamics that inflation expectations inject into the whole process suggest that both the Fed and the administration need to take a step back and think about the possibility of an inflation breakout. I don't think the administration's thinking about that much this morning. It's primarily the Fed's problem, and this gives them something to chew on.
Just to go over some other details from this most recent report, we also saw shelter costs increase by about 0.4%. So that is the gauge that they use to determine what is the cost for housing, whether it be through rent equivalents, homeowner rent equivalents for people who own properties, or just rent data that they aggregate in that number there. That was 30% of all the monthly items increase that we saw specific to shelter there. And I'll further some of Mark's points. We just recapped it. This was a very negative report. There's really no way to slice it in any other direction. The markets are selling off a little bit on this news, and we are seeing interest rates rise. But a lot. Yeah, it's really significant what we're seeing on the U.S. 10-year Treasury front. Like I mentioned to begin the show, we now sit at 4.65% on the U.S. 10-year Treasury.
I'm sorry, breaking news on Market Watch. Trump again tells Fed after CPI report that interest rates should be lowered. That's the exact forgive me. He didn't have to say anything. I don't know why he would choose to say that. That's the exact opposite conclusion. Sure, you can try that like you can try 2 Whoppers a day to lose weight. That ain't going to work though, and that's probably those comments are not helpful given the sell-off we're already seeing in fixed income today.
It's the exact opposite of what you're supposed to do from an economic perspective. It's just that's baffling. And we're going to get into that a little bit with some of these other former Fed representatives having commentary that was printed ahead of this inflationary report in terms of what the Federal Reserve should look at going forward here. But to drill further down, just a couple last points on this idea of why are we seeing this elevated inflation? And Mark, you did a good job of hitting a lot of these, but we have an unemployment rate, like you mentioned, that is low. It's historically in a very good place at 4%. That is, as you mentioned, lower than what the natural employment rate should be. We're also seeing on average hourly earnings, wage growth. We're seeing that grew pretty substantially, 4.1% year over year in the January report and close to a 0.5% increase, I believe, month over month. We've had GDP growing at about 2.5% over the course of 2024, off its pace in 23, but still strong economic growth and a lot of consumer spending fueling that economic growth. We saw consumer spending increase over 4%, the fastest since early 23 in the last quarter of 24. So to summarize, we've got a pretty strong economy through unemployment, through economic growth, and through some other figures here. And as a result of that, we're now seeing some hot inflationary data.
In the early stages of the COVID recovery, there were negative factors, negative in their impact sense, not negative as in subtracted from sense, that pushed up inflation. Supply chains snarled up, and then Russia decided to invade Ukraine, pushing up energy prices. Some of those negative factors reversed in late 2022 and 23, and they helped to bring inflation down. So it was bad luck on the upward part of the hill, good luck on the downward part of the hill. Our good luck may have run out. Now the Fed is faced, much like they were during the 1970s, with high underlying inflation, the result of too much demand. This is a classic economic problem. The question is, does the Fed have the resolve to put the economy through some pain potentially to keep inflation from breaking out again?
And I want to talk about that. We're going to lead into a quick break here, but when we come back from break, I do want to talk about what this report means to the Federal Reserve and what they should be looking at going forward here. Quick break, but right after this, we'll be talking more about the Federal Reserve and this inflation report.
Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network.
This is Michael Valila, adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Oh, what a night. Join me on Sunday, March 2nd for the 29th Annual Ellie Fund Red Carpet Gala at the Omni Boston Seaport Hotel. Hi, this is Candy O'Terry, honored to accept the Ellie Fund's Ellie Popkin Award with WCVB's Karen Holmes Ward from this beloved nonprofit devoted to breast cancer patients and their families. EllieFund.org, that's EllieFund.org, and don't forget to wear pink.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your healthcare plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare: Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025.
We come back from break continuing to break down the inflation report for the month of January that came out at 8:30 this morning. That was much hotter than anticipated, where consumer prices rose 0.5% month over month in the month of January and now are running at an annual rate of 3%. And so it now begs the question, Mark, now that we have this inflationary data and now a trend even over the last 3 months of hotter than expected inflation, what the Federal Reserve will do. And there's some commentary out there from some very well-versed people in the subject in some news publications this morning. One in particular is from Larry Summers, who is a former Treasury Secretary, who did in fact warn of the inflation risks in 2021 before that $1.9 trillion stimulus package was passed. And in this piece here, he basically goes over that we are in a position now where the labor market is strong, where we have a pretty resilient economy, that the Fed may be actually in the face of potentially increasing rates later this year, because there is this inflationary outlook that may not be as strong as others had thought. You also have a piece here from this one, it just gives me a chuckle. This was out of the Financial Times. Richard Claridia, who was a former member of the Federal Board of Governors had a piece basically saying that the market's underestimating how much inflation will fall this year, which was just tough timing to do 10 hours ahead of this report.
We put those two pieces in this morning because they're both eminent economists. Summers is better known, but Clarita's focus is monetary policy, and he was on the board. Summers wasn't, but Summers is eclectic. He's written about and has opinions about everything widely respected. The point is nobody really knows.
Right.
Summers is making a very traditional economic argument. It's one that we made in the last segment. It's useful keeping the so-called Phillips curve, a phrase I use from time to time. We've all heard it and then forgotten it. It just says that unemployment and inflation are in tension. It just says that you can't, by increasing the rate of inflation indefinitely, fool everybody into thinking the economy is actually really good. Eventually, they just start to demand higher wages. That goes into prices. This is what you had during the 1970s. If you keep that construct in mind, that unemployment and inflation are in tension, you'll always look askance at pronouncements that inflation is just going to come down magically despite the hot economy. Now, you may say, what about the late 90s? We had 4-ish% unemployment for a couple of years, very low inflation. And in retrospect, we now know that was kind of lucky. Productivity improvements are being driven by the internet revolution. They allowed the Fed to play a little fast and loose for a few years. Greenspan saw it at the time. He didn't raise interest rates prematurely or too much. The downside of that was, of course, the internet bubble, which easy money helped to stoke. I guess my point here is that there's no free lunch. Policymakers shouldn't try to get too cute. I don't think Powell, to his credit, over the past couple months, I might not have lowered as much as he's chosen to, but I don't think he's trying to be too cutesy about it. The danger is that you get it wrong because their information is almost as imperfect as the information that we have access to. They see the same data that we do. And this morning's report, startling is maybe how you described it, whatever adjective you used, was, I think, totally on point. This probably jolted the Federal Open Market Committee members, and they're now not even considering a rate cut, absent some external emergency for the foreseeable future, and they're wondering if they've overstimulated.
To further your point, that's one of the first things I looked at this morning, Mark, when this report came out, is the CME futures, which we talk about a lot in this show, which just give a sense for the probability being assessed for future rate cuts in subsequent Federal Reserve meetings. The next one that we're supposed to have scheduled where the Federal Reserve would make a decision on interest rate policy is March 19th. And now after this report, I don't know what this figure was before, but we sit at a 98% probability that rates will not be touched. Going out further to May 7th, so later in the spring, 86% probability that there will be no change in rates. It really is not until July, basically 5-6 months from now, where you even see a 50-50 chance that they would consider potentially a quarter basis point cut. So this inflationary report really, for the moment, it reinforces the idea, at least from this, again, take this. These are just probabilities that we're looking at here. This idea, to your point, that the Federal Reserve is not going to be considering rate cuts anytime soon.
Another takeaway from this little segment here, I talked about the inflation-unemployment trade-off. If you remember nothing else, remember that. It's a good framework for interpreting current events. Longer-term interest rates are up a full percentage point since the Fed started cutting. The Fed has cut short-term interest rates over which it exerts control through this money supply and creation of bank reserves. The Fed can't do a thing, for the most part, in normal circumstances, I should qualify that, about longer-term interest rates. Politicians can't do a thing. Well, should qualify that too. They could be fiscally responsible, helps to take pressure off longer-term interest rates. We saw that in the 1990s. But long-term interest rates and consequently mortgage rates and other rates tied to longer-term treasuries are up a percentage point or so since the Fed started cutting. A good reminder that it's economic forces, not even the Federal Reserve, as powerful as it is, that drives longer-term interest rates.
Really
important.
They're
Spiking today.
Really important point to make. There was this optimism from many homebuyers out there that they would enter into this year with perhaps the chances of getting a 6% mortgage. I believe we sort of hit that low point some point in the fall there, 6 to 6.25% on a 30-year fixed mortgage. Those dreams have diminished for the time being, where we've sat hovering around 7 to 7.25% on 30-year fixed mortgages, and that speaks to the impact on longer-term interest rates. The Fed does not have control over those. Larger economic forces weigh on what the 30-year fixed mortgage look like in terms of their responses. On the short end of the curve, that's where the Fed really has the most impact. We're heading into the break here. Markets are still selling off, with the S&P off about 0.5%, the Dow Jones off about 345 points. When we come back from break, we're going to be talking with Todd Lutzke from Cushing & Dolan. So get your estate planning questions ready here at 888-205-2263. Quick break, Wall Street Watch, and Ask Todd right after this.
Like us on Facebook and follow us on Twitter at TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have have one for that. Now, guardianships are time-consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699 or request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are pulling back as Wall Street reacts to the Consumer Price Index posted earlier this morning for the latest on inflation, where consumer prices climbed 0.5% in January, slightly hotter than expectations of 0.3%. On an annual basis, the rate of inflation climbed 3%, also higher than forecasts of 2.9%. At the moment, the Dow is down by 0.75% or 337 points. S&P 500 down by 0.5% or 31 points. The Nasdaq is down by about 0.33% or 63 points, and the Russell 2000 is down over 1% or 37 points. 10-year Treasury yield jumping today, up by 11 basis points at 4.65%, and crude oil down over 1.5%, trading just above $72 a barrel. Supermicro shares jumping by over 5% after the AI server maker significantly lifted its fiscal 2026 sales outlook, where the company said that heavy adoption of its direct liquid cooling technology in data centers over the next 12 months should pave way for $20 billion in revenue for its fiscal year. Meanwhile, Lyft shares down by over 7% after the ride-sharing company's bookings forecast for the current quarter disappointed. Lyft also said users were taking fewer and shorter rides. Uber stock is also seeing sympathy losses on the news. On the other hand, DoorDash shares are jumping by over 2% after the food delivery company said it grew its food delivery business in the previous quarter and projected better than expected growth ahead. Elsewhere, CVS Health reported fourth quarter results that beat analysts' expectations. While its full year guidance was in line with forecasts, CVS shares are jumping by 15%. Burger King parent company, Restaurant Brands International, beat earnings and revenue estimates for the fourth quarter. That stock, however, is pulling back slightly into negative territory. And after today's closing bell, we'll see earnings from Robinhood, Cisco, and Reddit. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
Every Wednesday, we're joined by Todd Lutzke from Cushing & Dolan for a weekly segment of Ask Todd. For any of you out there who have any estate planning questions, whether it's regarding estate taxes, Medicaid, probate avoidance, give our studio line a call at 888-205-2263. Again, that number for any of your questions out there, 888-205-2263. Todd, how we doing today?
I am never better, and you?
Doing quite well. Todd, a question for you. For folks out there, one of the basic tackling blocks for an estate plan oftentimes is avoiding probate. And I was wondering if you could just kind of give the listeners a sense for what types of assets may be probatable and the impact it would have on their heirs if their assets were to go to probate because they had not done a proper estate plan.
Yeah, and I think I'm going to answer that in line with the guide that we're giving away this month, which is Back to the Basics, because in that guide, one of the things it talks about a lot is the basic documents, in addition to the trust that's involved in that particular guide. But it really spends the time we need on basic documents like a will, a healthcare proxy, a power of attorney, a living will, a HIPAA form. These are basic docs that don't get as much attention. I say that because probate and the will go hand in hand. And since your question is on probate, I can tell you first and foremost that folks that do a will, please don't think that that's an estate plan. They think it is. They come in, they say, I've got my estate planning all done. I got a will. Well, it's better than nothing, I can certainly tell you. The will at least will ensure your assets go where you want them to go and how and when they're going to get there. However, I like to tell people that a will's a won't, because what it won't do is it won't avoid probate, which I'm going to get to. I know I'm getting there, but it won't avoid probate. It also won't reduce your estate tax. So if you're married and you leave assets to each other in a simple will, you didn't do anything to reduce your estate tax liability. So not a probate avoidance deal and not an estate tax savings. And if one of your goals is to protect assets from the cost of long-term care, also a will won't do that. So those are generally things that are used to make up an entire estate plan, and the will misses all of them. Now, the big thing it misses is it's the only document that has to be filed at the probate court. And when you get into probate, you now are looking at about a year-long process, number one. Number two, it's costly, right? You got to file things, and it's not even the filing fees so much, folks, as it is likely you're going to hire a lawyer, and it's the legal fees that you're dealing with for the next year when you go through the process. And it actually appoints an executor or a personal representative who, by the way, has no power until you're actually appointed. So please don't think just because you're listed that you're automatically the PR. You've got to go through filing a petition at the court, notifying all the heirs at law so they have an opportunity to object to you being appointed. And then finally, when you get a return date to the court, now you're appointed. And only after you're appointed can you run to that bank or to that brokerage account. And with the petition or the appointment from the court in one hand and the death certificate in the other, will you be able to finally access that money or sell a piece of property or move real estate. So it doesn't happen right away. So that's a good 60 to 90 days just to do that. Right. And then, of course, there's inventories and accountings and on we go, folks. But I hope that gives you a little flavor of why you don't want to be there.
I've seen it with clients that I've dealt with firsthand going through that probate process, like you mentioned, just a real administrative burden. So it's important to try your best to avoid that. We're going to take a quick break here, but if you have any questions for Todd Lutzke here from Cushing & Dolan, give our studio line a call at 888-205-2263. Again, anything in the estate planning realm, any questions you may have, give our studio line a call, 888-205-2263. When we come back from break, your questions next with Todd Lutzke.
Ask Todd with Todd Lutzke every Wednesday at 10:30, only here on the Financial Exchange Radio Network. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare: Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan's new guide is called Back to the Basics. It contains a simple blueprint that will help you create a retirement plan that protects your assets from probate and the nursing home, while also giving you guidance about how to create your will and set up your beneficiaries so that your family's financial security is intact as you get older. If you haven't done your planning yet, or need a second look at your existing plan, call Cushing & Dolan today at 866-848-5699 and ask for their new guide called Back to the Basics. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699, or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
You're listening to Ask Todd with Todd Lutzke on the Financial Exchange Radio Network.
Coming back from break here, we're here with Todd Lutzke from Cushing & Dolan. For any of your estate planning questions, give us a call at 888-205-2263. We're going to go to our first caller, John in Waterbury, Connecticut. You're on with Todd Lutzke.
Hi. Does Connecticut accept handwritten wills?
Handwritten wills. Well, I don't think it's the handwriting that matters. I think what matters is that it has the testamentary language that you need in it. Like, it needs to have in the very beginning language that says, I hereby revoke all former wills, right? All prior wills. So that needs to be in there. Whether that is typed or whether you hand wrote it, I don't believe matters. Now, I'm going to give you that as sort of with a grain of salt, because I don't know off the top of my head. I'm just going to give you what I think the legal requirements of a will are. I've never heard that a will has to be typed in order for it to be valid. I mean, think about wills that existed before we had typewriters. I mean, they did. They were handwritten and they worked. So I think you just need to make sure that the will has the testamentary language. That's number one. Number two, probably is going to need at least 2 witnesses and likely a notary. So you got to have at the end the notary and the 2 witnesses. So that has to be in there. So I think if you can get those kinds of things, and usually there's a self-proving affidavit language at the end as well. So as long as you've got that requirement or any other Connecticut, because folks, I say this, every state might have a few different rules as to what makes up a valid will in that state. So please look to your state. But I do think as long as you have those requirements that make a will, then it's valid. Whether it's typed or handwritten, I don't think is the determining factor for making it a valid will. Great question, though, and it does go back to this guide, which is back to the basics, right? It does talk about all of the basic documents in detail: wills, healthcare proxies, powers of attorney, HIPAA forms, living wills. It also gives you an idea about how to pick a lawyer. It talks about what to think about when you're doing your estate plan, how much you're worth, valuing your assets, family dynamics, all things that you need to think about. And then it's basically my legal recommendation to a made-up family with made-up family dynamics and assets. And then I give the description as to exactly how to accomplish all of their estate planning needs, culminating with an irrevocable trust. So get the guide. It'll help you get started at a bare minimum. And who knows, when you put your family situation into this fact pattern, maybe this is actually a recommendation for you. Call and get the guide, 866-848-5699 or legalexchangeshow.com. Back to the basics, 866-848-5699 or legalexchangeshow.com.
We're going to go to our second caller here. Mike in Boston, you are on with Todd Lutzke.
How you doing, Todd? My name is Mike. I'm in Boston. My parents put together a real estate portfolio, which they put into irrevocable trusts. My father passed away, and now it's my mom, my brother, and I.
Uh-huh.
And surprise, surprise, my brother and I do not get along in any way. And we're inheriting these properties in the trust. And we're both concerned about how the business, the real estate portfolio is run after my mom passes. And so I'm concerned about, him. He's concerned about me. Is it important? Is my best option to put into place what I'm calling a non-biased trustee member to oversee the trust and kind of manage the funds, and then the importance of getting an operating agreement to kind of hold each other accountable?
So let me ask you this: are all these rental properties in an LLC?
They're currently not, but the firm that we've hired is pushing to get them into LLCs.
So I would think an LLC is a good idea, and I think the shares of and maybe multiple LLCs, I don't mean to say one, and then all of the shares themselves should be owned in these irrevocable trusts, if that's what they've chosen. Irrevocable, I don't know if that's the right way to go or not, but it doesn't matter because you're concerned more about what happens when they both pass, and the trust, of course, at that point will be irrevocable. I wouldn't jump to the conclusion that you need to get an independent trustee right away. The most important thing is that you guys decide, and you're going to have to talk to each other to decide what you want to do. You got to read the document to see. Does it say divide the property and pay it out to you kids and walk away? Does it say hold it in trust for your lives, in discretionary trust for your lives, and then you got to run and manage the company? I don't know. You need to read the document to see what it says. If it says divide it, pay it out, walk away, our trusts usually have language that says, look, property sold unless you all want it. Well, if you both don't want them, then it's going to be sold. And if one wants it and one doesn't, then the one who wants it can buy out the one who doesn't at fair market value. So again, fighting or not, you're going to be able to at least get past that, walk away with what you want, right? Maybe they don't want to be. Maybe one brother says, I just want the dough. Okay, well, you have to arrange to have it purchased and bought out. So I would look to try to not cause any more fighting. Just say, look, from a selfish standpoint, we're both working towards the same goal. You get what you're supposed to get, I get what I'm supposed to get, and we don't have to work together. If we want to work together, I would have it in an LLC, and you guys should be managers of your own buildings, and sit back and collect rent and just say, hey, we're just going to not be friendly, but we're just going to be, business partners. And money will come in and half will go to each of you, and and that'll be the end of it. So I don't think there's a separate agreement you can have that says you're not going to fight. So that isn't going to work. I think you just need to work through it and look at what the document says first and foremost and take it from there. But I do like the fact that they've done some planning. So I hope that helps a little.
We're going to go to our last caller here. Mary in Waltham, you're on with Todd Lutzke.
Hello. My other phone is ringing. I hope it doesn't disturb you yet. I'm calling actually on my brother's part. He lives with his wife, but they don't get along, and 2 of their 3 adult sons live with them. But he wants to have a separate will so that, if he passes first, the house could be possibly split so that the wife doesn't get the whole asset. He wants some to go to the wife and the 3 sons, and the house be sold, because he said when the sons eventually inherit it, they are not good with money, and they would probably lose the house. So is there a way he can do a separate will when there's a house involved?
So if they're married still, and it sounds like they are married, correct?
Right. Yeah.
So you can't technically disinherit your spouse. I mean, there's always a forced heirship that allows them to get some amount. Now, as long as you provide an amount equal to the amount they would get under the forced share, it's probably going to be okay. So do we do separate wills? Well, you always do separate wills when you're married. One for husband, one for wife. I think what they need is way more than a will. I think they need a trust. And I think the trust needs to be designed, to take care of the spouse. But by the same token, as you said, maybe, not just give it to her if that's the case. And therefore provide for, and I assume these are their own kids. It's not a second marriage, right?
Yes.
Right. So they're each going to want to take care of their kids anyway. So this will provide for it. And I probably would have language in the trust, again, not just a will, but a trust that not only protects it from potential nursing home claims and taxes, but that it could hold it in trust for these children who might not be great with money, as you said. And if need be, the trustees could always sell the house, the money could go in, and then the money could be used to take care of these children with discretionary distributions for their needs, their health, their education, welfare, support, so that it stretches out the money a little bit so that it can be used to better their life rather than just, dump it in their hands, and then that could cause way more harm than good. So I think they're going to need to do a little bit more than separate wills. I think they should sit with a lawyer and learn how a trust can really take care of both of them, and they don't need to really be angry with each other when they're doing this estate plan, because the common goal is the kids here.
Absolutely. Todd, thanks so much for taking time with us this week. Happy early birthday to you.
Oh, thank you. Always a pleasure.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutzke has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated.
The market sell-off has subsided a little bit, with the S&P 500 only off about 0.5% at the moment. The Dow Jones off 250-plus points. It was off over 400 points at the market open because of an inflationary report that we received for the month of January that was hotter than anticipated, where inflation is now running at 3% on a year-over-year basis. We have also the 10-year Treasury as a result of this inflationary report up about 10 or 11 basis points at 4.65%. That's all the time that we have for the first hour of the Financial Exchange, but come back with us in the second hour. We'll go over the inflation report and much, much more right after this break.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute
is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, and in it, you'll learn how to protect your assets from probate and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Understanding Medicare, Essential Questions Answered. Mike, first one that most people have: how do you actually become eligible for Medicare?
Vast majority of us, you turn 65, and there's a special window that becomes open to you when you are turning 65 for you to sign up for Medicare. And important here because you really do have to sign up. Even if you might not be using the coverage in the way you planned, there's a 7-month window, 3 months before the month you were born, 3 months after, and the month of your birth, that you have to sign up for Medicare, and you need to get in there and do so. Otherwise, if you're disabled, you are potentially eligible for Medicare, but for most of us, it's that 65th birthday.
What are the different parts of Medicare, actually?
Yeah, so the Part A basic piece is just your hospital insurance coverage. Most people don't pay for this. This is part of the benefits, and it'll cover inpatient hospital stays, skilled nursing facility care, etc. Hospice care, for example, is in there. Then you get into Parts B, C, and D, and that's where you get into more complex stuff. But your Part B is your medical insurance. Part C is your Medicare Advantage plans, and then Part D is an important one when you're retired as well, your prescription drug coverage, and that's where getting a professional involved there to help you consult on what you might need given your specific health needs is important.
The guide is titled Understanding Medicare, Essential Questions Answered, and it discusses these topics as well as a host of other ones. How do you request it? Call 800-393-4001. That phone number again to request the guide is 800-393-4001 for the guide Understanding Medicare, Essential Questions Answered.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Kicking off the second hour of the Financial Exchange here, taking a look at markets all in negative territory. Granted, not as large of a sell-off as we saw earlier this morning when the market opened. It's all largely tied to the January CPI inflation report that we received this morning at 8:30 a.m., which was much hotter than anticipated and slightly startling in terms of what you typically see from these reports. What we saw is a 0.5% month-over-month increase in CPI, or just a basket of goods that they track for an inflationary basis. It's now running inflation at 3% year over year. We were in and around 2.5% to 2.7% in the late summer to early fall. So we certainly have seen over the course of the last couple months inflation picking up a reasonable amount. Some of the major contributors to the inflation report increases that we saw in the month of January were food costs as well as energy prices. On the food side of things, we've covered a lot on this show. Egg prices have surged 15% month over month, the largest increase we've seen since 2015, and now egg prices stand up over 50% from last year. We saw food prices in general increase about close to 0.5% month over month, and energy prices were up 1% as well. Even stripping out the impacts of energy and food, which can be a little bit noisy on a month-to-month basis, inflation was up across many other different metrics out there, whether you look at shelter costs or some other areas out there. So it begs the question that we talked about in the first hour is, what is the Federal Reserve's path from here? And likely what you see from the CMA futures, a pause in rate cuts certainly will continue to be their mantra heading into the next 6 months or so here.
Yeah, just to review, the Fed controls the money supply, and it uses that to give banks money, which in turn allows banks to lower the rates they charge to each other and to people. That's how the Fed more or less controls the short-term interest rate we call the federal funds rate. That target has come down in the past several months from 5.25% to 4.25%. The Fed has brought it down because it thought the economy would slow more. It was worried about that. The Fed, in the short term, tries to balance unemployment and inflation. When it sees the economy getting too hot, in the words of a Fed chairman from the 50s and 60s, its job is to pull the punch bowl away, right? Put a damper on the party, which is usually my job. But when the Fed does it, it does it by raising interest rates. So in a way, the Fed controls economy-wide demand. Sorry for the recap, but I have to get myself into this frame of mind to think about where the heck are we?
Right.
What does this bewildering array of data actually mean? And are we in trouble or aren't we? I think that's what it comes down to for most people. Hey, am I screwed? Do I need to worry about this? And the answer this morning is, honestly, I'm a lot more worried about it than I was a little concerned last month when the month-over-month print was elevated. Everybody dismissed that, and core was subdued. There are other measures of underlying inflation, though, of what's really going on. It's the same reason we look at underlying inflation. It applies to why you don't weigh yourself just at night or just in the morning and declare mission accomplished. You take I use this analogy a lot.
He loves the
but
way,
it applies
way
perfectly because we've all done it. We've all wanted to lose 5 or 10 pounds, or maybe you needed to put on weight or something, and you need to take an average over several days. It's the same reason why we look at different measures of underlying inflation. What is really going on with inflation? Well, core, as you pointed out, Paul, was elevated, but that's just stripping out food and energy. What about insurance? What about cell phone bills? What about any number of transportation-related costs? There are other measures that try to get at underlying inflation. There's the median, the one in the middle. That's been going up at a 3 and change % rate over the past several months if you annualize it. That's a problem for the Fed and for us. There are other measures of outlier trimming that employ outlier trimming methods, and they all point to the same thing, Paul. Inflation that's a lot higher, underlying inflation that is, the thing that the Fed can control. It's a lot higher than the Fed's goal. And this is why talk of tariffs, increased inflation expectations. We saw 2 reports in the past few days which are showing them tick up, one a lot more dramatically than the other, but nonetheless both pointing in the same direction. These are problems for the Fed, and now we've got stimulative fiscal policy coming down the pike with tax reductions potentially and more spending. I would not want to be a Fed policymaker today.
Oh, no, I would never want to be one at all.
Or not that I'm qualified.
It's just a miserable.
Even if I were.
It's an incredibly difficult job. I would almost make it akin to being a referee, where you kind of get you get very little credit and you get a whole lot of blame when you screw things up, and it's just not a good position to be in. It's funny you mentioned hey, where are we? Taking stock of where we are from an economic perspective. Are we screwed? My brother-in-law, who runs a tree company down the Cape, will often just text me every 6 months or so and just say, "Are we headed into a recession?" And he had one to me a couple weeks ago. That same text, "Are we heading into a recession?" I said, "No, not yet." And he responded back, well, when? And the short answer to what we're covering this morning is, to my brother-in-law, if he's listening, we're not there yet. We're in fact worrying about something else. We're worrying about the other side of the coin, that the economy is running too hot. So I always think of that, are we screwed? That's basically my brother-in-law's check-in text, which is just, are we in recession? And the short answer is no,
the Fed
not
could
yet.
have to, again, think of the Fed as ultimately controlling demand. Do you throw more money into the economy? People are going to spend it. Ultimately, that catches up to us. You can't fool all the people all the time. It causes inflation, but in the short term, it can be very stimulative. Historically, the Fed has had to induce recessions to bring down inflation. They've tried to walk that tightrope, and so far they have successfully. But this morning's report, coupled with last month's and those underlying measures of inflation that I mentioned, they suggest that we may not be out of the woods. And we thought we were in remission is a different way to put it. And the disease, and inflation is absolutely a disease, seems to still be with us, and it's a bit of a gut punch.
No question. Piece here in the Wall Street Journal, U.S. economic optimism is rising, but it's not converting to hiring yet. That's from Randstad CEO, who runs one of the largest employment agencies by revenue, where there's just this disconnect between sentiment and reality is basically the piece that he puts out here, where there is a lot of optimism about the U.S. economy. We do have an unemployment rate that sits at 4%, historically extremely low. We have continued to see job creation month over month in the U.S., upwards of 100,000. Granted, that's off of the peak levels that we were seeing where it was, over 200,000. But all in all, the labor market has been quite resilient. There's arguments to be made that yes, it's not as hot as it once was. You're not seeing as active of a quits rate, people, jumping from job to job to get a higher pay increase, but we are seeing wage increases for those people still in their jobs. And while there might not be as much robust hiring of new employees, it still is in a really good place. And so to answer his question, it's just the pattern that we see from employers is that staying with the status quo, not hiring people, but not really letting too many people go.
Part of me asks when I read stories like this, what planet do these people live on that they think 4% unemployment can be improved upon?
Yep.
And some Treasury Secretary Bessent, I'm sorry, I don't know how it's pronounced, is targeting 3% GDP growth, which is where we've been for the past 2 years, so it's really not that ambitious a target, but okay.
Better than China saying 5% just blindly.
Well, China can do it because they're still catching up.
Yeah.
And
true.
Their demographics allowed for that. Like the United States could have done that when it was an emerging economy.
It's too well
But for a
developed at this
big
point.
economy with very low labor force growth, it ain't going to happen. So it makes me, when people look for more employment growth or faster GDP growth, we can improve on inflation certainly, but not without the GDP trade-off that we talked about earlier. I ask myself, have they ever read anything about economic history, and what the hell planet do they, forgive me, but what planet do you live on? It doesn't get any better than this in a statistical sense. I'm not saying everybody's doing great. I don't want to diminish the severity of anybody's individual lived experience. But overall, Paul, this is as good, this is late 90s good.
Yeah, let's hope doesn't end up the same way it did with the late 90s.
Oh, yeah. You're right. Maybe a bad analogy.
We're going to take
Although
a quick...
That wasn't a bad recession.
I didn't live it as much. We're going to take a quick break here, but when we come back, we're going to be going over the S&P 500 earnings and corporate America's profit projections, as well as talking about the Magnificent Seven being, quote-unquote, so last year. That's right after this break here on the Financial Exchange. We'll also be playing trivia as well.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan's new guide is called Back to the Basics. It contains a simple blueprint that will help you create a retirement plan that protects your assets from probate and the nursing home, while also giving you guidance about how to create your will and set up your beneficiaries so that your family's financial security is intact as you get older. If you haven't done your planning yet, or need a second look at your existing plan, call Cushing & Dolan today at 866-848-5699 and ask for their new guide called Back to the Basics. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your healthcare plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare: Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange is proud of our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K will be here before you know it, so mark your calendars for Saturday, November 8th. We'll be keeping you updated on registration information in the coming weeks, but in the meantime, if you want to help our great American heroes right now, just visit dav5k.boston, where you can make a donation today and support such programs such as the Veterans Transportation Program, which takes injured vets to their medical appointments. That's dav5k.boston. Time for trivia here on the Financial Exchange, and today is actor Josh Brolin's 57th birthday. Brolin, the son of famous actor James Brolin, gained his own fame when he landed one of the starring roles in 1985's The Goonies. Trivia question today: what was Josh Brolin's character's name in The Goonies? Once again, what was Josh Brolin's character's name in The Goonies? Be the fifth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us at 617-362-1385 will get that t-shirt. See complete contest rules at financialexchangeshow.com.
Coming back from break here, we've got a piece here in Bloomberg. Corporate America beats profit projections, but investors don't care. And so basically the gist of this piece is that what we've seen from the S&P 500 companies that have reported is a 12.5% increase on earnings per share above estimates of 7.3%. But stocks, at least it's argued in this piece, haven't moved really that much. And ultimately what it comes down to is, Mark, we've covered this a lot. There are very lofty valuations for the market out there. It is priced to perfection, trading at a very high multiple. The thing with earnings estimates here is that the analysts are constantly moving the bar up and down. So in this instance, you had analysts lowering expectations ahead of this most recent earnings data, and we've seen companies beat it across the board. But ultimately, what we want to see from a market perspective, if you're looking at valuations, we want to see earnings grow, but we don't want to see valuations expand. That's one of the better ways that we can get it to be at least more reasonably priced to abate this issue of, hey, this is a really richly traded stock market.
I'm going to ask the question I asked in the last segment. What planet do you live on? Stocks are up. What do you want exactly out of equities? What do you want, 50% a year?
Yeah.
Like stocks were up 20% over the last 2 years. They're up year to date.
Close to 3%.
Okay, so these returns are spectacular by any historical yardstick. What do you want? You made the critical point, I think, about stocks' response to above lowered expectation earnings, which was kind of a big yawn. Of course, they already priced, so to speak, abnormally high earnings out to infinity. They're not going to go up forever. Again, I got to ask, Paul, what planet do you live on? Alternatively, if you think that question's a little too rude and direct, like, what more do you want? Stock performance has been absolutely spectacular, a little alarmingly so if you look at the pattern of stocks after unusually good performance, way in excess of earnings growth. All this stuff seems to be, as you said, Paul Lane, priced in.
Chuck and I were doing the same thing where the market, I misspoke, it's actually up over 3.25% year to date, excluding any of the movements that we're seeing today. And we did this segment where it's, what else do you want? You know, all these pieces that we cover in the publications that we read for the show that put out a lot of good content are questioning the volatility in markets, stagnating. It's up over 3% year to date. To your point, coming off the heels of 2 years of 20+% rates of return. You can't complain. So everyone needs to chill out a little bit.
With respect to economic growth, unemployment, stock market returns, it doesn't get any better. It's not going to get any better. I'd wager whatever I can afford to. I'm no big shot, but I know it's not going to get any better. It's almost, if there were laws of economics like we have in other domains, I would invoke them, but there aren't. I'll just invoke historical experience and sort of common sense, even though I hate the term because a lot of people are saying it lately and coming to very bad conclusions. So maybe I should just stick with historical experience. It's not going to get any better than 3% real GDP growth, 4% unemployment growth, within a couple ticks maybe, but we ain't going to 5 on GDP. We ain't going to 2 on unemployment. Stocks are not going to continue to return 25% a year for the next 10 years. I don't think anybody in this audience anyway is expecting any.
No, definitely not. The Magnificent Seven or so last year. Cash cows are the new king. This is a piece out of the Wall Street Journal where value investing in general has significantly underperformed, whether it be the S&P 500, which is kind of a blended approach at it, or large cap growth. The companies that have powered a lot of the stock market returns over the last couple of years are those Magnificent Seven that we talk about so frequently on the show. Google, Apple, Amazon, Tesla, NVIDIA, Microsoft, and Tesla, I believe, was the one that I left out there. But instead, value companies have not fared as well. This piece here makes the argument that rather than looking at just large cap value indices out there, like the Russell 1000 is a pretty popular one, there's another approach, and I almost think this guy's on the payroll for this fund. I'm not going to mention the fund that he continues to cite, the journalist here, because it's almost like he's trying to sell their ETF. But this ETF or investment strategy focuses more on free cash flow generation. So how much cash is a company generating rather than just what is it trading at? What is it priced at from a book value perspective? That's very much the school that sort of Buffett came up in with Ben Graham, looking at the value of a company and if it's fairly priced or not to generate returns. A little tweak on that approach, not to say that Buffett doesn't know or isn't aware of this approach, but focusing more, Mark, on free cash flow here.
Yeah, it's one way to invest. I tend to think that's just a variation on value investing. There are only a few factors out there. Factors are like elemental forces. There's the stock market, but then if you open the hood, what's really going on? It's like if you physics or something, you crack open an atom, you get protons, neutrons, and I guess electrons. This isn't a great analogy. But at some point, somebody discovered, those are not elemental. There are these things called quarks. I sound like Chuck now. I'm talking about science, and I should not be.
I didn't even take
physics
in high school, so
I should not. I don't know. I think I saw this on the History Channel or something. I'm trying to draw an analogy for something that has something else going on that's more fundamental, but you don't see it on the surface, and it's really interesting. So what's underneath what's really going on with the S&P 500, for example, a total market index? Well, there are value and growth forces. There are also size forces and momentum forces and so-called quality. Quality is a little newer, but there's evidence that it drives returns. So what's really going on underneath the hood of the stock market is this tug of war between growth and value, large and small, quality and momentum and profitability. These are elemental forces, and there are ETFs that allow you to play elemental forces. There's momentum. You all know this. You could look at momentum ETFs, quality ETFs, value ETFs, growth ETFs, size ETFs, large, mid, small. Do you want to do that though, or do you just want to buy the whole package? It's really hard over time to beat the whole package, i.e. an S&P 500 index.
Taking a look at markets as we head into halfway through the hour and 2 hours into trading, we've got the markets off about 0.8% on the S&P 500. The Dow Jones is off over 450 points, and the NASDAQ is off over 100 points, or negative 0.6%. Here, and then we also have the U.S. 10-year Treasury spiking up quite a bit and continuing to hold those levels, with the U.S. 10-year Treasury right now sitting at 4.65%. That is up about 11 basis points. We're going to take a quick break here, but when we come back from break, we're going to have the answer to our trivia question, and I'm going to tell you why the Dow Jones is a useless index right after this break.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare: Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned, and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Trivia question today was, what was Josh Brolin's character's name in The Goonies? That'll be Brand. Brand was the lead character's older brother, apparently. Winner today of the Financial Exchange Show t-shirt was Jason in Kingston, New Hampshire. Congrats to Jason. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
One of the things that sort of grinds my gears a little bit when you're out and about, Mark, and you tell people what job you do, or they just happen to know that you are connected to the market in terms of what your day-to-day responsibilities are, they'll say to me something to the effect...
You just lie, Paul.
That I do the day-to-day on the market.
Yeah, you say I'm a sheep herder or something.
Oh, no, that your job's different than that? The sheep herder? Just kidding. Anyway, they will say to me, oh, geez, Paul, the Dow was off 400 points today. The Dow was off 600 points today. And not to go against the Dow, there's nothing wrong with it, but the real person who follows the markets knows that the Dow is useless. I would make it akin to... In the scoreboards throughout the Major League Baseball, all of them are digitized except for Wrigley Field and Fenway Park. They're manual scoreboards, which is cool. It is something that historically it's really fun to see the old, Fenway scoreboard be changed manually, but it's something that has no practical use today. It's not the most efficient way to keep up with the score. The same thing applies for the Dow Jones. It's got a lot of history behind it, and it's something that is, synonymous with markets, but it's not something that any real economist or someone who studies the markets really tracks its performance. And there's two reasons for that. One is it's only made up of 30 companies, so it's a very narrow swath of companies when you're looking at the U.S. stock market. And the second most influential reason why it's just not that important is because it's price weighted. So a stock like Goldman Sachs is trading at close to $650 versus a stock like Cisco is trading at, $62. By those metrics, Goldman Sachs has a much heavier weighting and impact on the Dow Jones than Cisco does. It is a heavier portion of it. And we all know, or everyone should know, that the stock price that you see, that can be easily manipulated by stock splits and other different metrics out there. It's really not a true sense of what a company is worth. Just because Goldman Sachs is at $650 doesn't mean it's 10 times more valuable than Cisco. So anyway, I covered my rant.
Yeah, you can't
on the Dow
answer.
Jones.
The Dow doesn't allow you to answer the question, what did the market do? Because of that price weighted versus market cap or total share value, which is what market cap weighted means, distinction. Said differently, everybody could own a little slice of the S&P 500, everybody in the world. Everybody in the world cannot, because it's not market cap weighted. You could prove this, just take my word for it. Cannot own a little slice of the Dow. So it's not a good representative of the market. And as index funds became more popular, that's why you don't have a Dow Jones index fund in your 401k.
Right.
You have an S&P 500, or you have a Russell 3000, or something else. But if generally speaking, if it's called an index fund, it is market cap weighted. That's not always the case. Some use the term in a slippery way. There's nothing wrong with it, but it's not entirely correct. So yeah, the S&P has allowed us to answer the question, what did the market do in a truly representative sense?
It covers 11 sectors, and it has, over 500 companies. A part of it, so a better diversified approach to look at the markets rather than 30
And
stocks.
if you like modern portfolio theory, some of you came across that term in a finance course, it's efficient. And it needs to be cap weighted, so to speak, to be, well, it's not an expression, it's a thing. It needs to be cap weighted to be efficient in a modern portfolio theory, which is what all of finance is based on. All those target date funds you have in your 401k and the work that professionals do for you, they all use so-called modern portfolio theory. You really can't implement it without index funds, or at least something broadly diversified.
The calendar is turned and the cold is here to stay, so now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visit usvi.com and use the code VIBE2025 for more information and book your trip today. That's visit usvi.com and code VIBE2025.
Auto manufacturers have had a really difficult couple weeks or even a couple months. If you talk to the CEOs of Ford or GM, they both have been highly critical of the on and off nature of potentially mentioned tariffs between Mexico and Canada. A lot of Ford and GM and Stellantis utilize Mexico and Canada as a critical part of their supply chain. So you had CEO of Ford, Jim Farley, coming out yesterday saying, and I quote, "A 25% tariff across the Mexico and Canadian border will blow a hole in the U.S. industry that we have never seen. It gives free rein to South Korean and Japanese and European companies that are bringing 1.5 to 2 million vehicles into the U.S. that wouldn't be subject to these tariffs for Mexico and Canada." And this is something that would put a lot of inflationary pressure on vehicles for these U.S. auto manufacturers and poses an economic risk for these businesses out there, Mark.
Yeah, the estimate of manufacturing jobs lost because inputs get more expensive to jobs gained due to more domestic production of, say, steel is like 75 to, and I'm not exaggerating, it's 75 to 1. All the empirical work done on this subject has come to the conclusion that jobs losses that are not as conspicuous you put the tariffs on, they're going to bring the news crews will go to Pittsburgh, and they'll talk to steel workers, union officials, and others, and they'll say these tariffs are great. We love. Bush did it. Bush 2, I should say, not HW. Virtually every president since Clinton has imposed. I think every president since Clinton has imposed steel tariffs. So this is not new, but the job losses far outnumber the job gains, and that's partly what Farley's talking about. They're going to have to idle lines, slow production, and as you say, there's an inflation.
So that bears mentioning again, because it is such a great point that you make. The empirical evidence has said that for every increase from a tariff perspective, you've lost 75 jobs versus
and other in related industries that use steel and aluminum in this case as inputs.
That is really, really staggering. So we'll see, what those tariffs will look like. We have until March 1st, I guess, but things can always change on that front in terms of when we get more clarity as to what that would look like. GM has also mentioned that they've been in talks to try and mitigate 50% of these North American tariffs through, utilizing different ways to manufacture and deploy capital in different ways. We're going to take a quick break here on the Financial Exchange. When we come back, a little bit of Stack Roulette right after this break.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your healthcare plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare: Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Oh, what a night. Join me on Sunday, March 2nd for the 29th Annual Ellie Fund Red Carpet Gala at the Omni Boston Seaport Hotel. Hi, this is Candy O'Terry, honored to accept the Ellie Fund's Ellie Popkin Award with WCVB's Karen Holmes Ward from this beloved nonprofit devoted to breast cancer patients and their families. EllieFund.org, that's EllieFund.org, and don't forget to wear pink.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
All right, time for a little bit of Stack Roulette. I will kick us off here. Dave's Hot Chicken, which is a hot chicken restaurant based out of California, or that's where they have over a quarter of their stores, made some interesting changes as a result of the rising labor costs in California. What we saw with California is there was an increase on the minimum wage for fast food workers to $20 an hour. That's now the highest in the U.S. for restaurant jobs, and it could be even higher this year. And I think it's a good piece, Mark, that illustrates sort of the unintended consequences of some of these legislative changes, or tariffs could kind of fall in this bucket as well, where they increase minimum wage and businesses start to scrutinize on their expenses. And rather than perhaps hiring more employees or it being enriching to the fast food workers out there, companies like Dave's Hot Chicken have found ways to try and become more efficient through the use of getting rid of dishwashers and having an automated dishwasher system, or having more kiosks ordered for their restaurants and cutting down on headcount because they're utilizing these kiosks, which cost about $5,000 per location and $150 in terms of maintenance costs. Rather than actually benefiting the labor force, companies just find a way to sort of work around it to maintain their margins. And it's important to note that.
Yeah, for a long time, that was textbook economics. If you raise the price of an input, whether it be capital or labor, someone's going to substitute away from it if they can. So maybe if you make capital more expensive by taxing it or putting a tariff on it, they might instead substitute 2 workers for every automated machine, just as an example. Similarly, you make workers more expensive, they will try to automate to the extent that it makes sense. That is up to a point. For a long time, that was textbook. Then there were some studies done in the early 90s that suggested, hey, maybe you can raise the minimum wage and it doesn't adversely impact employment. So now you'll get these kind of nuanced answers from labor researchers, but I tend to think it's, on balance, it's not good for lower wage workers.
No, it's an interesting point that you make to tie into the auto manufacturing piece. If you had these long-standing tariffs, what goes against Ford or GM to scrutinize their domestic operations, and rather than paying the higher wages that are associated with union workers in the United States, find other areas of their supply chain to automate so that they're cutting out employees. Yeah, so it can have unintended consequences. I think that bears mentioning. I've never had Dave's Hot Chicken. I know there's one by one of our offices in Woburn. Is it good?
Yeah.
Real good?
We've gotten it here for lunch.
Yeah,
maybe you've missed it every single time we've gotten it. We've gotten it like 3 or 4 times now, Paul.
What, in terms of Chick-fil-A, how would you compare it to Chick-fil-A? Obviously a little spicier.
I mean, I would put it in different categories. I kind of put Dave's Hot Chicken in like the Chipotle category, where it's like a fresher sort of thing. Not that Chick-fil-A is like the worst, but like Chick-fil-A is like flat out fast food, right?
Yep.
Whereas Dave's Hot Chicken is a fast casual sort of place, but the chicken's
it's in the double bypass category as opposed to the quadruple bypass category. That's how I like to rate fast food.
There's what's it, like 4 different levels of spices, and like the Reaper one is the top one.
Reaper?
Yeah. I think that's what it's called, but no, it's fantastic.
Have you
got to
get
it?
You've had it here?
I've had
Pretty
it
good.
when we've gotten it here. I don't know. Don't ask me.
He's so concerned.
I'll eat
about
anything.
He's so concerned about his weight. He's just
no,
knocking
it's
back
not,
salads.
It's not my
every
concern
single
for
day
my figure.
so he can make sure the.
I'm saying I don't
intact.
have a discerning palate. If you told me you could put a McChicken and a Dave's Hot Chicken in front of me, blindfold me, and I'm not sure I do.
I'm the same way.
To be honest.
What do you got for us, Mark?
Story from CNN: chocolate prices are up 20% this Valentine's Day, I guess, over last, and CNN points out that that's a record. That sounds extreme, and I guess outrageous until you look at the year-over-year change in coca prices, and this is where I start to get confused. There's the coca bean, which goes into making chocolate, which comes from a tree that in turn has a different name. It's called the cacao tree. So the first thing I guess if I had a little wish list here, it would be, can Trump just come in and rename all this stuff? He's on a renaming kick. Can we just call all this stuff chocolate, please? So you've got coca beans up 150% year over year. Their prices were stable for the longest time, like the length of the little series I'm looking at here, which goes back decades with the exception of a couple blips that I'm pretty sure nobody remembers. It's not that volatile a commodity, but it's gone berserk like so many things have. I was going to say since COVID, but I'm not quite sure the timing works out there. It really started in 2023, increased coca prices. And up again 150% year over date, which translates only into a 20% increase in, say, Valentine's Day chocolates, although the category is a little broader in this CNN piece. I don't get that. I'm sorry for posing not having anything definitive to close this loop with, but coca prices are up by 20%. They could be up by a lot. Chocolate prices, up 20% year over year, but coca prices are up 150. So I guess it could be worse.
Only Mark could turn a story about Valentine's Day's chocolates
into
and bust out
CPI
charts and data. And
I know you don't think this is a generous gift, but I have to remind you,
increases.
Sweetheart, that the price of Coke is up 150%. I got a tremendous deal on this, Russell Stovers. I know. I hope that touches you like it touches me.
Text us at 617-362-1385 if any of the listeners out there get chocolates for their significant others for Valentine's Day, because I think other than maybe once or twice in my history have I ever splurged for chocolates for a loved one around Valentine's Day. Flowers is definitely a lock that I've succumbed to purchasing many times around this time of year for this very pointless holiday. But
I can't stand Valentine's Day. I can't stand it. It's just like you go to any store and you just see another guy in line at the market with a bouquet of flowers, and they're all just like robots, being like, "Here come with flowers." This is Valentine's Day, right? It's just like, oh god.
The pageantry with it, the restaurants, the way they do it. I talked about this off air. My wife and I went out once on Valentine's Day, and they do these prepackaged menus. They rush you out of there. They're trying to turn over the table quickly.
It's one of the worst dining experiences you'll ever have.
It's so bad.
It's awful.
It was a one and done for us. Where this is not
not
enjoyable. This is not relaxing. We're just
sorry I brought it up. That's why I took the inflation angle.
It's just not a good time. There's better better.
The servers are miserable, and I don't blame them because it's a crap holiday, and it's just like everybody's forced to celebrate it. It's just
No
just
love
gross.
from the Financial Exchange crew. No love for Valentine's Day here at the desk. Man in search of lost Bitcoin fortune wants to buy the landfill where he swears it's buried. So this story, Tucker and I were talking about this. It has probably been going on at least as long as I've been doing the show, which is the last 4 or 5 years, maybe even longer. James Howell, who is a British IT worker, had a substantial amount of cryptocurrency on a hard drive that he threw away, I guess, 5-10 years ago. Who knows how long it's been at this point?
It's been over 5 years.
The guy just keeps getting press. It's absolutely insane the amount of coverage that this story has had. It first made headlines in 2013. Okay, so when he revealed to the public. So we're now talking about over a decade. This poor sap is still looking for his hard drive that has all this Bitcoin fortune.
Got like $1 billion worth on it.
At one point it was worth $7 million, but I believe now we're talking about upwards levels of even more than that sum that he continues to. Now it's supposed to be $700 million in terms of Bitcoin that he has. He's looking now to purchase the landfill where it's buried. He is. These guys at the landfill probably hate his guts so much.
Why wouldn't they look for it?
They probably have at this point.
I'm sure.
And maybe one of them has it. Who knows? Although he has the password, right?
Yeah, that's the issue. Is that he if he can't go to the dump, he's saying he's going to get robotic dogs to go after this thing, to dig for it for him. The amount of money that
robotic dogs.
Yeah, from Boston Dynamics locally.
Okay.
He's gonna have to source them to help out. He's put $11 million of a business plan together, which he proposed to spend 3 years excavating this landfill to find his hard drive. Imagine.
You better have the right landfill.
That's what I was just going to say,
What a waste
Tucker.
of resources.
Imagine if this was at a different
This is a
landfill.
huge waste of resources. This is the tragedy of crypto. It engenders this rent-seeking type behavior where people are just looking to accumulate tokens.
How long would
How
long would you guys chase this dream? I wouldn't be at 12 years if he said that this is 20.
Oh, I'd camp out there. Don't get me wrong. For $1 billion.
Oh yeah, I'd be doing the same thing probably.
At some point, is it even in that landfill? I guess we'll let you know 10 years from now. That's all the time that we have for this edition of the Financial Exchange, but we'll be right back at it tomorrow morning at 10 a.m. Thanks so much for joining us.